Hello, I'm Hickey from interest.co.nz and welcome to a special report brought to you in association with ASB. I'm here at the Reserve Bank in Wellington, where the Reserve Bank Governor Alan Bollard has just finished a press conference after announcing a cut in the official cash rate by 50 basis points to 2.5%. This was widely expected by the markets, but what he said was not. He said after announcing the cut that he expected to keep interest rates this low or probably even lower until late 2010. This is unprecedented for a Reserve Bank to say this. They're usually very careful about what they say about future interest rates, and they leave themselves plenty of wiggle room to change if things change. But here, Alan Bollard has said the recession in New Zealand and globally will remain in place for a long time. So long, in fact, he expects the official cash rate to remain at 2.5% or lower until late 2010. He is saying that low interest rates will stay for at least another year and a half. Again, unprecedented. Now, this all steps back to March the 12th, when he came out and said that he wouldn't cut rates to 0%. Now, unfortunately, that meant the markets believed that interest rates were now back rising again. And when they did rise, particularly long-term interest rates, Alan Bollard had to come out and say that interest rates were going to stay low for some time and that the markets had gotten it wrong, effectively. Today, he has taken another step to try and tell the markets that for the long term, and he means for the next year and a half, interest rates will remain low. So what does this mean now for mortgage interest rates and term deposit rates? Well, we've seen longer term mortgage rates, 2, 3, 5-year rates, actually blip up in the last month or so. And a lot of people have decided, who were floating, to fix, believing that interest rates are rising. This announcement today means that at least short-term interest rates, so we're talking variable and floating rates, will remain low for at least another year and a half. Longer-term interest rates, that's another question, because the banks are under intense funding pressure from the $100 billion they have borrowed from the rest of the world. And those funding pressures, not just from the international funding, but also from their domestic funding, they're having to fight very hard to keep term deposit rates attractive to mums and dads, savers in New Zealand. So overall, I think that longer term mortgage rates, the sort of 3, 4, 5-year rates, may fall a touch, but not too much. We are seeing some cuts in the variable and 6-month rates. We'll see whether all the banks take that through. Key question, will we see 1 and 2-year rates drop significantly? It all depends on what happens in the wholesale markets, and the signal today from Alan Bollard will certainly give them plenty of food for thought, potentially to lower those wholesale interest rates. I'm Hickey. That was a special report brought to you in association with ASB from here at the Reserve Bank in Wellington.